Okay, going to do a quick weekend view of the markets. I think the last time we did one of these was a few weeks ago, 22nd of August, it says on my YouTube account. So we talked about a few things on the 22nd of August in the weekend view of the markets, and we're going to just cover what we talked about and see where the market is basically now. So first things first, the S&P 500. We've moved through the highs, all-time highs, and this is a switch in my world to put, buy the dip on the table. That is the switch. It's not a switch on its own. It's a switch with I do it over all the markets I follow, and I run my sort of risk on how bullish or bearish the markets are. So it's either buy the dip is in play or sell the rally is in play. So buy the dip is clearly in play now. We was waiting on the first retrace. We got the first retrace. It was a over 10% pullback in the S&P. So this is the second pullback we've had in this run. We had a pullback here, what was about 8%, and it was a bit more in some markets. So, higher low, higher high. Through the highs, at trading bases, we look for an area we call mean trend, and this was, an extremely interesting area, and previous resistance becoming support, and just the normal pullback area is usually around the sort of 10% zone. Obviously, rotation out of NASDAQ 100, but it's coming to an extremely interesting area. Does it mean that this low will hold? Well, it might not hold in all markets, but I'm hoping it holds on the on most of them. I've got the S&P, I'm just comparing the S&P with a few of these because I'm just going to run the S&P against the FTSE All Share. So the last time we viewed these, come off an interesting, a meaningful area. We'll come off this low here from the market crash, and we've got this big divergence, and we was talking about it, how time or price, the markets do dislocate for periods of time, but they tend to come back. They don't tend to do it for that long, and they don't run exactly hand in hand. But when you see a divergence, the all share is just in this channel. It's building a higher low visually, so we can drag this over now and just say, look, we're still in a channel on the all share. It is what it is, but time or price, we did come together some on the divergence. So off the meaningful area again, we did come together some, and this is the lagging market. So if I show you that on the FTSE 100, a real laggard of a market, not really related to what we, the stocks we trade in the UK. It came together, but it's easier to see on the meaningful market being the 250. I mean, it came right in, and the 250 up until this point, and then it had this little dip down. We had a couple of ugly days, well, literally one ugly day, and then we bumbled out, and we drew this base in the 250, and basically this is what we were looking for. I'm just going to take that market off now. That we were looking for normal action in the 250, a right side of a base to build off mean trend, and that's what we got. Wonderful action. Small caps, even better. We drew this line in real time at trading bases, as I always tend to do. And say somewhere in this area is a good area to look for that reversal, and the small caps just ripped on Friday after closing above that base. So, big sign for the small caps. Hopefully, that puts buy the dip firmly on the table. Don't quote me on that, these things are pretty fluid. The DAX is just going sideways. It's a bit of a wild market, the DAX, but I have a bit of a rule. When the DAX and the transports walk hand in hand, I take notice, and the transports has been leading, as it should, through highs, all-time highs now. It's just closed through all-time highs. That puts buy the dip on the transports on the table as well. So, nice market, extremely nice market. As the market pulled in, I'll just, through this area, the only softness in my account was actually the metal stocks. I've got a few gold stocks and miners. So having a good run, they put a bit of a spike in the portfolio, and they all pull back together as they do. They tend to be twice as volatile as the general stocks. So had a bit of volatility in that side. All of them are still in profit. All of them doing fine in good sort of looking bases in my world, and hopefully they're going to get a run, because we saw the gold miners start to hit the screens a few earlier in the week, but Wednesday, Thursday, and then Friday, they got a bit of love, so that's nice to see as well. So early days, but we're out of this previous low anyway. We're more than 2/3 retrace on it. What else did we talk about? We talked about Bitcoin. So I'll jump onto Bitcoin. So Bitcoin was up here last time I looked. It was the 22nd of August area, and it's somewhere over here. And I put a box in down here on mean trend again for traded through 6-month high, 52-week highs, through a meaningful level as well. Buy the dip, interesting area is mean trend for us, and now it's trading up here today. Actually, it's done what I call a swing kicker. Next up, treasuries. We actually drew this bearish line, and we think that these things could drift. Let's look at the 7 to 10 year as well. And we will also just look at cable, because we drew a pullback area on cable as well. So if you want to know the thought behind this, just go back to that previous weekend video on the 22nd of August and see what we talked about in there. So markets were pretty bullish. They triggered some bullish levels, what put buy the dip on the table. In between the last video and this video, I marked some mean trends in the chat for the Trading Bases members, and I've backed into some more trades on the pullback in the markets. Pound US dollar came into that box we talked about, where reward to risk is found. And I suppose we could say that the dollar bull needed to bounce as well in the last video, and let's just go and have a look at that. I'll just show it on UUP. So where were we? 20. We were sort of in this area here, and we talked about a bounce in the dollar. It drifted and then moved up to this line. I put this little zone in here, meaningful area. Previous low here would be a pretty meaningful resistance area. It didn't quite make it. I put a cross in the chart and a little zone, and it came all the way up to mean trend, and it's drifting lower again now. So distribution day on Friday. So fantastic period. Growth stocks are just ripping. Gambling stocks, gaming stocks, gold stocks look pretty good as well. Ones what are getting it's kid in the sweet shop market. It reminds me of 2012, 2013. So a lot of opinion out there, extremely bearish. Everyone's predicting the market's going to crash again. Well, who knows, The most important lesson in sort of, I learned to trade in a bubble. I invested from being a teenager. I had guidance from family who've been, my granddad, my dad was an investor. I invested in the big cycles, and just it's over 10 years I've been sat in the seat now, and the most important lesson I had to learn coming out of that GFC was just follow the stocks. The stocks what have got a reason to go up, and the GTRS top 40 has just been absolutely killing it. The stocks are just, we've had over, I think it's 12 or 13 gap 10% or more, maybe more. The worst move against the GTRS stocks, what I've seen was 7% in one I hold, but it's back up again through the highs now. So a little bit of profit taking because it traded towards the move. So it is a fantastic market for stocks. The portfolio, my market model unwound me out of the market in March. I nibbled at a few other stocks just before the market crashed. It literally was out of them by the next Monday, I think. I think I nibbled at some on a Thursday or Friday or something. And then coming off the lows, it was good in American US swings. Zoom, check the chart on Zoom from the, one of the strongest stocks, came out in sort of end of March, April was it, on some nice swing moves. Little did I know it would keep going, but good swing trade market. I didn't start getting back into stocks till July. My portfolio is way through all-time highs at the moment in the history of the world. It's just been a fantastic year. I went 2% drawdown in March because we gave back a lot of open profits, as you do. If you ride trends, I don't trade in and out of these stocks. I buy the best and I try to hold on for dear life, and I add to the best. So the market model unwound me. Swing trades were pretty active for me post the sort of crash, and then from sort of July I've been building into growth stocks in the UK. They all started emerging. It takes some time for the charts to set up, and just a huge year really. It's a great year. It's the market is fantastic. So what am I trying to get at there? The first thing I did in March was I haven't had the TV. I've had the TV on twice in the office. I used to just watch the heat map on the open just to get a feel, but I don't even do that now. I've switched the TV off because there's just so much noise. I've turned my Twitter off for most of the time. Just make a few updates on what I'm doing in the Twitter. Cut out all the news. When the market is this good, this is when big money is made in the market. Fantastic growth moves in stocks. I am in more stocks than I've been in since 2017, 16-17 period, and I haven't been stopped out of one stock. No stock has gone anywhere near my stop in the market. I have stops in the market on all stocks, and everything is working. I've got a couple what haven't moved yet from entry, but it's just a fantastic market. So, yes, we don't know what the future holds, but my message would be put the blinkers on, stop being sort of opinionated about where you think the market should go. Nobody knows. Stories are written about stuff in the rearview mirror. Just trade the right hand edge, trade the best stocks with the best growth, and cut the news. You will do okay. It's a fantastic market. So I will leave that there, and I'll update again in a few more weeks.